What's up everyone? My name is Anthony, and in this video I'm going to be doing something a little bit different, and I'm going to be first talking about the two meme stocks AMC and Gamestop, and then going into some market analysis. Usually I talk about the markets first and then go into specific stocks, but since we got a lot of requests to do AMC and GME, I'm going to start with those first because I typically do not follow the common technical analysis as well as other stocks do. So first of all, we're going to jump right into AMC. And if you like this type of analysis, feel free to drop a like on the video and subscribe if you haven't already done so. And I also post signals in the Discord where the link to join is down in the description below. So be sure to join if you haven't done so already. So to start off, we're going to look at AMC. And as you know, today we went up around 35%, which is a pretty insane number for a meme stock. But the thing to note is that the options currently are very overpriced due to the implied volatility increase. So when you get this type of market move, your options are going to become more and more overpriced due to just this recent hype priced into the contracts. But I can try to break down the price action that we're seeing overall in terms of wave theory and just basic indicators. So as you know, we first had that initial pop up around late January, February for the meme stock hype, and we pushed up to around 20 and then came back all the way down to around the original levels around $5, and then we started gradually pumping up from those levels, and then finally over the past 2 days or so we got another push to the upside. So in terms of wave theory, we can see this initial drop. So let me get rid of these EMAs really quickly. So we can see this first initial pump as the wave 1, then down for the wave 2, and we can see how much we retraced exactly. So we take our Fibonacci retracement tool and we drag it up to the top of wave 1, and we can see we hovered around the 786 levels about, so we kind of consolidated there, and then we pushed off from those levels, which makes sense, and it qualifies for a wave 2 in terms of wave theory. So wave 2 consolidation, and now it looks like we're working on a wave 3. So what these levels right here are just the wave 3 extensions based on the wave 1 length. So all you do to do this for yourself is you drag it down to the bottom of wave 1, up to the top of wave 1, down to the bottom of wave 2, and then you'll get some really interesting levels of resistance on the way upwards. So as you can see right here, so if I zoom in to the chart, we're sitting at the 1.414 and 1.618. So these are levels of very high probability of the move failing and coming back down. So as you can see, these levels exist around the 30s, so early 30s to mid 30s. And so what we could see in the future is a possible touch of these levels if we do get up there, and then I expect a rejection and a fall downwards. Because as you know from these moves, these are not very long-lived. Whenever you see stuff go up significantly, like 35%, it's bound to correct. You cannot try to get it in when it's already up this much. It's just not worth it. And like I said previously, your options are very overpriced. So even if it does go up to these levels, you won't be making that much profit anyways. So I just want to give out a little bit of warning. If you're thinking about getting in now, this is not the time. So even if we do come up these levels, you're not going to make that much money. And in terms of, so we're disregarding wave theory because wave theory is a little bit hard to use when the wave 1s are very strong like this. Another example is GameStop, which I'll go into that after AMC. We had that huge wave 1 pump upwards. So when we do have that, wave 3 becomes less and less effective because it's very hard to get a wave 3 that will match the magnitude of wave 1. But since AMC is currently doing that, we can apply wave theory to this price action. So in terms of fib levels, we see that we might come up to the 1.414 and 1.618, but after that, we're getting into very risky areas in terms of AMC. Now, if we look at the candlestick analysis, so we're disregarding wave theory, let's look at some candlesticks on the 1 hour chart. So if we zoom into these areas right here, let's look at these red candlesticks right there. So we can see a very clear wicks at the bottom. These are very long wicks, and those are pretty much bullish wicks, and those indicate that buyers and dip buyers are present and waiting to buy any dips on the stock. So you could actually buy in on these candlesticks just alone, because if you see a bullish candlestick wicks usually on a huge increase, that's a very bullish sign. In most cases, not all the time, but in most cases. And if you continue to see them like here, you can expect that the stock will keep pumping up. However, we're starting to get the opposite. We're starting to get bearish wicks forming on the top, which indicates that sellers are starting to kick in at these levels, and they might be there might not be enough dip buyers to sustain AMC at these levels, and we're already very extended, especially the 1-to-1 level, which means where the wave 3 right here gained equality with the wave 1 at $23 around. That is also a very high area of resistance and support on the way down if we do get there. But in terms of the level, we already bypassed it, so we're getting into risky territory already. So in terms of candlestick analysis, I'm starting to see bearish wicks forming at the top, which doesn't necessarily indicate that we're reversing right now. But we are, once we get up to these levels, if we do, we're going to start seeing more and more of these bearish wicks. And that just indicates that you should be getting out of your position as soon as you can. So now I want to bring in some EMAs. So we talked about wave theory and candlestick analysis, and now we can bring in some indicators to help us with this price action. So I'm going to turn on the 12, 21, and 55 EMAs. And I want to note that on the 1 hour chart, we were very, very extended above all these EMAs, even the short-term ones, the 12 EMAs. And this is a huge warning sign. When you're extremely extended above the EMAs, you're bound to come down to these eventually. So even if we could go up here, we're gonna come back down to touch the EMAs. It's just a rule of the markets. You need to come back down to the EMAs. And I can show you that previous price action. So let's look at the initial pump up for AMC right here. So I'm gonna go all the way back down to that January, February area. So if we look at the price action, we gapped up insanely, kind of stayed here, but then we instantly came back crashing down to touch the EMAs. So whenever you're extended like this above, you can clearly see that we're floating high above the EMAs. We're going to come right back down to touch them and stay near them. So that's just going to be what you expect to see currently. So even though we're looks like we're doing really well, like 36%, 35% increase, we're bound to touch these EMAs eventually. So like I said, if you're thinking about entering the position now, I do not recommend doing that. And if you're in a position, you must be up. That's great, but you should take profits. I would recommend taking profits here. So that's just my opinion on AMC using candlesticks, EMAs, and then basic wave theory. And to continue that idea about wave theory, if there are enough buyers to support this wave 3 pump up, we could try to pump up for another wave 5, which is unlikely, but it is possible. So if we do come up to these levels, which are common stopping areas for wave 3, we could come down for a wave 4 retracement and then push up for a weaker wave 5 in the future. That's a possibility. But for now, you do not want to have your position holding through this wave 4 dip. Because first of all, like I said, the options are overpriced. So theta decay is extremely high at the moment. So you do not want to be holding. You're going to lose most of your profits on this wave 4 downwards. So yeah, be sure to sell your position if you're currently in it. And that's my take on AMC. So to summarize, we could see a push upwards to these levels, and then we're going to definitely get a rejection and a return to the EMAs in the future. So that's my opinion on AMC. And now I'm going to go to Gamestop. So ticker symbol GME, as you know, and this is another meme stock. And we did go up. We've been going up significantly over the past couple days or so. And the analysis for GME is relatively the same as AMC, but I want to break it down a little bit further. So we have this initial wave 1 pump up, and then a wave 2 retracement. This looks like a perfect wave 1, 2. And now we technically could be working on a wave 3, but because, like I said, the first wave was extremely high and extended, this wave 3 tends to not form what you would expect. It would just be a very weak push upwards compared to wave 1. So what that means, we can take some basic Fibonacci extension levels of the wave 1 on the wave 2, and we're going to target some of these levels. So what we see right here, if we draw it out, we get some of these levels around here, which are good targets to look out for of just areas of resistance on the way up. And we can see, if I remove this this rectangle, we can see that we are interacting with these levels on some time frames. So for example, this level right here, the green level, which happens to be the 0.382, which, if you don't know, it just means that this move right here was 38.2% of this initial wave 1 upwards. So we can see price is reacting to these levels. It's touching it with the wicks and then jumping right above it, which indicates some bullishness. So in terms of GME, we could see a possible touch of these levels, so 272, which would be at the 0.5 level, and even the 0.618, which could be at the 327 level. But those are extremely those are gambling situations. There is a very little chance that wave 3s will come up to touch these levels, for example. So if I scroll up here, if we're following just traditional wave 3s tend to stop around these levels, and GameStop going to 700 just does not seem like a practical idea. So in terms of wave 3, this is why it falls short on meme stocks like this, because you cannot expect the wave 3 to have a comparable pump upwards as the wave 1. It's just very low probability. So what we can do is just look at these common levels that I'm showing you right now, and those are good areas to take profit if you are holding a position. So, and now I'm going to bring back the EMAs and some of the, let's do some candlestick analysis. So just like AMC, when we see price hovering really far above the EMA, so if I zoom into this area, the same hype stock momentum where we got a push upwards to like the high 400s, we can see that we were extremely far above the EMAs. I mean, the EMAs were down here around 260 at the time of the pump up, while price was around 2 times the amount of the EMA price, which just indicates that you're going to come back down to touch it, and that's exactly what happened. So if we look here, we dissect this price action previously, we pushed upwards, hovering really far above the EMAs, even came up to this level, and then we came right back down, crashing to touch this 55 EMA, as you can see here. So yeah, just in terms of applying that to the current situation, you do not want to be caught up in your position when the stock retraces like that to touch the EMAs. So in terms of GameStop, we haven't had as much of a parabolic increase as AMC because we can see it, we're still really close to the EMAs. We're not very far ahead. What I could see if we do push upwards to these levels, then we'll come back down to touch probably the golden EMA right here or the 55 EMA. So we could come back down to touch this area. And like I said, you do not want to be caught up in this position when that happens. So while you're up at these areas, I would recommend not getting greedy and take profit if you're currently in the stock. I would not open any positions on these meme stocks because like I said, even if we do come up to these levels, so the 270 and even the 328, implied volatility is extremely high on these options. So you have to be perfectly right about timing as well as taking profits in order to really get some money out of it. Or else data decay will eat your options price out. So that's pretty much the summary of the stock. And if we look at candlesticks, and essentially we see some bearish candlesticks forming at the top. This doesn't necessarily indicate that we're coming down, but it is a sign that we're losing some buying pressure at these levels. So if we keep seeing these as we push upwards, if that even happens, then that would be a further sell opportunity. And for those of you asking whether we could trade puts on stocks like especially AMC, the same logic applies. It's very hard to make money off options when the implied volatility is so high, just because that increased implied volatility makes your options more overpriced. So if you could trade puts right here and catch the top and then ride it down to the bottom, you would make some good profits, but it wouldn't be as much as you expect. As I've done this before with AMC a little bit with just puts, and it doesn't give you as much profit as you expect just because the implied volatility is just too high. So if I were making a decision here, I'm not making any plays on these stocks, but it is fun to watch, and it's cool to see what the stock market can do, especially nowadays with the all these meme stocks and Wall Street bet stocks. So yeah, be sure to leave a comment in the comment section if you have any more questions about these stocks. I'll be happy to answer them. And I just want to repeat that we've already had a similar price action in the past. So if you unfortunately were in this stock when it was at the top and didn't take profits, and it came right back down to crash into the EMAs, don't make the same mistake again. We can see clearly that we're really far above the EMAs, and I can guarantee you that we're going to come back down to touch them in the future, whether it's now or next week. We're going to come back down to touch these EMAs, and they will not be fast enough to come up to these levels like 26, 27. It takes some time to come up to these levels, so that's just a heads up. Okay, so now I'm going to go to this market analysis. So we're going to look at the S&P 500, which is reflected by SPY, and then we're going to also look at the NASDAQ or the tech sector, which is reflected by the triple Qs. So first of all, looking at the S&P 500, we can see if I remove all these indicators that we've had this really big choppiness in the markets, so just sideways price action. We've been slightly grinding higher, which is nice, but overall no decisive move in either direction. So what this means is that the markets, I think, are getting ready for another push to the upside, and this just forms something called the Wave 2 consolidation right here. So let me get rid of the EMAs because I can make the chart a little bit busy. So in terms of wave theory, so we started here with this impulsive move upwards for a wave 1, then push downwards for wave 2, and now we're working on the wave 3. And within this wave 3, we have a push up for the wave 1 here. So if I get rid of all the indicators, so we have a 1, 2, and then we have a 1, and this whole thing would be a 2. And now we're looking to push upwards for a wave 3 of the wave 3, which would thus indicate a very strong move to the upside. However, I haven't doubled down on any of my options SPY calls yet, because I'm still waiting for that bullish confirmation. And so far, we can see in the post market we're up a lot. So I think around maybe 0.37%, something, or 0.33%, something like that. So that's a very bullish indicator. Um, One lesson to learn that I will share with you in this video is when markets gap up a lot. So let's say more than 0.5%, when they do gap up green, they tend to stay above that level and go up from there. It's very rare where you see markets gap up more than 0.5% and then come down below that level. It does happen, but it's not as common. And so just a heads up, if we do gap up green, I'm going to be adding to my positions because that's a bullish indicator that we're coming up to finish this wave 3 to the upside. So another alternate account that you could see from this price action, it doesn't really change any of the price outlook, but if you really wanted to, based on this recent price action, we could move the wave 1 up here. So this whole chunk of increase makes the wave 1. And then we retrace this whole complex correction right here, sideways consolidation, would form the wave 2. And then now we're just starting the broader term wave 3. So there's many ways you could count this. You could either put these wave 1 2s down here or up here. No matter what strat you have, you're going to come up for a wave 3. So it doesn't really matter which one you label it as. I prefer this strategy this count, because it does follow exactly the count that we're seeing in the markets. And I did explain that in the past video. But I've seen some other analysts put 1 2 here. And I've also seen some people put, so we've had some kind of like A, B, C formation, which I don't agree with at all. People are saying that we're going to come down bearish for a wave C, maybe close to 400. And I think that would have like maybe a 2% probability of actually occurring, just because we've already seen this impulsive wave structure to the upside. So there's no indication that we're in any kind of flat or corrective pattern. So that's just to answer any questions about whether we're coming down to 400. I don't think that's going to happen. But for now, staying bullish. And if anything changes, I'll be definitely alerting that in the Discord and keeping updates there as I do already. So yeah, that's an analysis for SPY. And if I want to zoom out on the broader price action for anyone curious, we've been in this sideways price action recently. So a complex correction, a WXYXZ. Essentially, you can also label it as a WXY. It doesn't really matter how you label it. We just know that this is a complex correction, and thus why the markets are trading sideways. So we're pretty much at the exact same levels that we were at around a month or two ago. So that just tells you we're in a complex correction pattern, and that's the pattern you kind of want to avoid. But since we see an impulsive breakout like this, that's a buy signal for me, and that's why we got into options in the Discord on calls, and so far we've made some decent profits off of them, and I'm looking to keep adding to those positions. So that's going to be an analysis for SPY. To summarize, still looking bullish. This looks like a really good confirmation of an impulsive breakout, and once we do get that impulsive breakout, I'm going to be adding to more positions possibly tomorrow. So stay tuned. I'm going to be posting that in the Discord if we do any trades. Next, we're going to go to triple Qs. So this is the tech sector. And like I said in the past videos and also on the Discord, I'm generally less bullish on the tech sector than the S&P 500 due to the fact of this past structure. So we can see in this complex correction, we have harsher retracements. We have more downside when there's corrective periods, whereas the SPY we have less downside, just less retracements when we go to the upside. So I'm generally less bullish on the tech sector, but as you can see, we still had some upside motion, and we're getting around the same price action as we did in SPY. So we can kind of see this push upwards and then this consolidation again. So just like SPY, if we do break up above this consolidation area, as you see here, so this consolidation around 332 to 334, once we break out of this area, we can expect prices to keep uptrending, just with the S&P 500. And so I'm not playing any calls on the triple Qs because the SPY looks just more bullish in my opinion and a lot safer. But yeah, Qs look still bullish, but just less price targets than SPY. I'm still anticipating a wave 3 upwards for SPY, whereas Qs, I don't really exactly know what the wave count is, to be honest, because over here, it looks like we could either be forming a complex correction, another complex correction, so a W, X, Y, X here, and then a Z, or we could be pushing up for a wave 5. Either possibility is likely, and there's really no way of telling right now. But SPY is a little bit more clear in terms of what we could be expecting in terms of wave 3. So that's my analysis of the markets. Overall bullish, and we're getting really good momentum in the post market. This is just telling me that we are getting that impulsive breakout. So looks good, and I'm already in SPY calls right now as I signaled in the Discord, and I'm going to be looking to signal some more additions to that position in the future. So now moving on to some individual stocks, let's look at Disney. So in terms of Disney, I also signaled this, or I talked about this in my previous videos and how I was bullish, and we can see a very similar formation as or just like a simple ABC correction, but we're in the bullish phase of the correction, and think of the B wave of the correction as standing for bullish. So A, B, C, we're targeting that B wave. I have some price targets here at 189, 194, and 203. And it looks like we're heading straight for those. So Disney looks good. I would recommend buying it as a stock possibly. That looks like a really good buy. We should come up to these levels and for the B wave upside. So nothing has changed about this analysis. Looks like we bounced right off my buy zone over here in this rectangle here, and we're looking to go upwards for that B wave. And also, I want to do an update on AZN or AstraZeneca. So I've signaled this in my Discord as well as on previous videos on YouTube, and we signaled it around these levels right here. So I saw that this was a buy around these levels here, and so far we've gotten a really nice push upwards. And keep in mind that this stock is not very volatile, and even though we've gotten a lot of choppiness in the market, we still see upside in this stock, which is exactly what I intended with picks like this, with vaccine plays. I didn't want a very risky stock, but I wanted one that had a high probability chance of going up. And so far, we've gotten exactly that. So in terms of AstraZeneca, nothing has changed. Looks like we're pushing up for a bullish wave 3. And if I zoom out on previous price action, we can see a 1, 2, 3, 4, 5 for the wave 1 upwards, then a correction for the wave 2, and now we're working on that impulsive wave 3 to the upside. And I have a price target of 75, just based off the wave 1 length. So nothing has changed, looks bullish to me, and everything's looking good for AZN. Next on the list is GE. So this is a little bit more interesting. I actually do recommend this around the 13s level, so down here. So around these levels, these consolidation areas. And I did post an options play on my Discord, and the interesting thing was that it was actually down because we got in. So if I zoom in on this price action over here, so we can see we've gotten some choppiness. Just because GE is not a very fast-moving stock, we've gotten just up and down, up and down, up and down, and that obviously will tear up your option prices just because theta decay. But we did get a huge move upwards. A 7% increase for GE is insane because this stock is not very a high volume, or sorry, this stock doesn't move that much usually, so the implied volatility is very low. So actually, the options that I had in the Discord were up around, I think, 1,000% today, which is insane. They were down and almost worthless, but we actually got them into profit today. So that's really good. I signaled that we should take some profits on them if you can, and they actually do expire tomorrow, so it looks good. Our strike price was 13.5 right over here. So now we're way above that and looking for some decent profits in terms of the daily percentage gain. So, but in terms of GE, I also recommend it as a stock pick. So if you got into this area when I signaled it in my YouTube and my Discord, this consolidation area when I signal it, in terms of stock picks, this is looking really good still. And if you entered on my buy zone, you'll be up a decent amount right now in terms of stocks. So far everything's looking good for GE. And the reason why I wanted to do this stock is just like AZN. I wanted something more stable. Even though the market conditions were a little bit volatile, and we got exactly that. We kind of had some stability and then a push upwards. So bullishness, but still stable, and we got exactly that. So wave 1 up, wave 2 down, wave 3 up, this wave 4 consolidation, and then now we're pushing up for that wave 5. And I have targets at over here, $17, $16 around, and then a very conservative target of 15.3-ish area. And here's the arrow I actually drew out previously in my Discord, as well as I think in a past YouTube video. And so far, it looks like to be following that price trajectory very well. And I haven't changed this arrow since then. So yeah, looking good for all these stock picks. And next, to complement some of this analysis, I want to go over the VIX. So the VIX, as you know, is the fear index. And typically, when the VIX goes down, the stock market goes up. This is not always the case, but it is a slightly weak correlation, but it does exist. That correlation does exist. So we can see we're right around support levels on the VIX. And if I zoom out, so let's go to the daily time frame over here. So I got these support lines from previous price action, so we can see a lot of touches along this line right here, and now we're right above it, or yeah, we're hovering right above it. And if I go down to like the 5-minute chart, um, I anticipate that we're gonna slowly seep under it. So we're gonna kind of maybe we can have some bounces or reactions here, and then we're just kind of flow through it. And once we do, you can expect a lot of upside to the markets when that happens. Because when you see the VIX close under strong support, um, it's just going to keep going down. It might come up to retouch it, but oops, I don't want to do that. So let me show you what another possibility is. If we do break under it, we could try to retouch it and then fail, and then we come back down all the way to touch this. So this is a hopeful target for VIX of 11, around 11.8 or 12. So if we do come down to this level on the VIX, you can expect that the markets will have lots of upside, and that would make sense with these price targets up here around like 433 and 427 on SPY. So just to reemphasize that the VIX right now is looking to support my analysis on the markets as well as individual stocks and the bullishness I anticipate. So looking to fall under this level of resistance right here, and if we do, we can expect good bullishness from the markets. So that's just a recap of the VIX. And finally, last stock pick of this video, I want to talk about Twitter a little bit. So Twitter seems to be following the same kind of price action as Disney. So if I take away all the indicators, we see this retracement here from the upside. Same with Twitter, we see a retracement from the upside like this. And in terms of Twitter, we see a complex correction forming where we see a W, and then an X, and then a Y. And the reason why this is a complex correction over an ABC is because the W wave right here looks to be taking on some kind of non-impulsive structure, and then same thing for the Y wave. So we see kind of like an ABC rather than a. We can technically see here that this looks like a 1, 2, 3, 4, 5, but this wave 1, 2 is right at the top and so negligible that I do not think this counts as an impulsive structure. Although I could be wrong, but at this point it doesn't really matter what structure it is, whether it's WXY or an ABC. When you do have those corrections, those corrections are also going to be corrected, and that's what we're seeing right now. So we're pushing upwards from this corrective period, and here are some basic Fibonacci retracement levels, which I did was just take the top of the correction down to the bottom of the correction, and these are expected levels of resistance on the way upwards. So I have targets, very conservative targets at 61, very high chance of hitting these levels. Also, there's a gap fill around 64, so and this happens to be right around the 0.5 retracement level. So I do anticipate Twitter to very choppily or slowly, gradually touch these levels, and I'm currently in option plays, and I signal these on my Discord. So yeah, once again, be sure to join the Discord if you haven't done so already. I post all my market analysis and technical analysis on these stocks and keep updates as much as I can. So yeah, that's just where I really like posting updates on. And in terms of Twitter, this stock will go upward like for past when I've traded this in the past. This stock really likes to just slowly grind upwards without you really knowing, but then you get really good profits from the stock. And currently the options that I entered, the pricing on them is being a little bit weird right now. So we entered around 58, but the options are currently down. So I'm looking into that. But when we do come up to these levels, which look like a very high chance of happening, you can expect that those options will be in the money and profitable. So in terms of Twitter, this should also follow the bullishness on the markets. So we could be touching these levels, coming up to here, and then possibly failing in the future. And this top right here seems to be in line with the bull market top around these zones right here. So yeah, these stocks are looking to align really well with my market analysis. So that's just a heads up for the future, and definitely looking bullish on Twitter as well. So I know I talked a lot about a bunch of stocks in this video. So once again, feel free to let me know if you have any questions or just need some clarifications in the comment section, or you can just simply message me in the Discord, and I'll be happy to answer those questions. So that's going to be it for this video. I did a lot of updates on a variety of stocks, and I'll continue to post updates in the Discord as well on the YouTube. So thank you so much for watching, and I'll see you in the next video.